Good morning. I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Scott, indices hitting that 50-day moving average target from a week back. We're seeing, an oversold bounce today. What do you do? How do you get not faked out by this rally?
Well, yesterday was an interesting day because we talked about how the indices should tag the 50-day, and sometimes what they like to do is they like to break that moving average because a lot of people have stop losses there, and it's actually unfortunate because what they do is they break it, they trigger the stops, they make people sell their actual holdings, and then once it re-grabs that area, they then rally it because what that does is relieves selling pressure. So as a strategic trader, I was looking for it to break it so we can cover some of the shorts and then get long for a cute oversold bounce.
Right.
And these cute bounces and these cute trades are tough if you have a short-term time horizon, but that's how traders make money.
So then what do you do with that short-term time horizon and an oversold bounce?
For me, I went long yesterday, and I'm going to measure the bounce. I'm going to see what type of bounce do we have. Is there volume? How are the leaders acting? Where can we go? And I'm going to put levels in front of us to look at on where we could sell the easy bounce, and then maybe look at an area that might be resistance to short that bounce. So that's what I want to show you right here on the charts. If you look right here, this was that 50-day moving average. This was also a trend line that it broke below and came back above. If you take a closer look here, you'll see that it was a nice reversal type trade. So what I think could happen here is I think we can get a bounce back to 1338 to 1340, and that will be a key area to measure what's going on with this market to see if this bounce could actually lead to something or it's just shortable or sellable into it. So if you held your stocks through this correction, and then you want to get rid of some and get a little comfortable, you sell into this bounce instead of selling into the weakness.
Well, that's what I was going to say. So for a long-term investor, obviously maybe buying here is totally risky, but if you miss the chance to sell, then you're saying on this bounce, that's the time.
Yes, and that's what we call salvaging the trade. If you missed one opportunity, take the next one, and don't give that up or don't pass on that.
Hey, real quick, I was reading a note from Mark Arbiter, the Chief Technical Strategist at S&P, who said that in a note yesterday that the bull market that started in 2009 is coming to an end, and he expects a 15 to 20% correction in indices, which, by the way, a 20% correction would put the S&P down at 1062.
1062, that's a bold call.
Yeah, what do you think about that call?
I'll figure it out as we go. Right now, I know that we are a bit broken. The leaders have acted poorly. They did reverse yesterday. I'm going to see what kind of bounce. I'm going to follow retracement rules. And if we only bounce back to that level that I just showed you, that 1338 to 1340, and there's no volume and the leadership falters again, we will head lower, but we'll measure the move as we go instead of just putting something out there, which I sometimes think is irresponsible because it really scares the you-know-what.
I was going to say 1062 is a very scary level, and there's no time frame necessarily on that either.
I like Sam's level, 1295 better.
All right. Picking those